Assalamu alaikum wa rahmatullah. This is Ahmed Saltaji. I'm a registered investment advisor with ZAKI Financial. It's my pleasure today to talk to you about different ways to save with Islamic considerations. Now, before you save, it is very important to pay down and pay off your debt. The worst one, of course, is credit card debt. Now, after you pay that, then you turn around and start concentrating on your long-term debt like house loan and student loan. Now, one might ask, how could a Muslim end up with credit card debt or house, loan or student loan? Of course, credit card debt should not be used by a Muslim unless like in dire emergency. Now, student loan, though, is more common, and a lot of Muslims use it out of necessity. Otherwise, they cannot pay for college, which is very expensive. Now, house loan sometimes become a necessity, but alhamdulillah, we have a lot of Islamic options now. But anyway, you pay down those, credit card debts, and then you go after that and target your long-term debt. But since the long-term debt is a debt that would take, sometimes 15 years or more, uh, you cannot really put off your retirement saving for 15, 20 years, and it's like just too late, at that time to start saving for retirement. At the same time, your retirement fund most likely happens through your employer who's offering you some matching donations. So uh, you also want to take advantage of that. So uh, while you're trying your best to pay off your debt, whether it's student loan or house loan, um, you can still save some for retirement. Of course, like let's say student loan usually is, tied to interest and it's prohibited in Islam. So you target that first. If you have a house loan that, for example, has interest, maybe you can refinance using an Islamic type of, financing. And this way you can, give yourself enough time to, um, you know, uh, pay your house, debt slowly while saving for retirement. So those are just from the Islamic standpoint. Another thing from Islamic standpoint is to write your debt in your will, so your family can pay it after your death because you're accounted for that. So when you start saving, the first thing you have to do is to put aside an emergency fund, which means, a fund that you can access very quickly, investment you can sell and get the money next day, or, money available in cash and so forth. Uh, how much do you save is usually, if both spouses are working, 3 months worth of living expenses. If one of them, then 6 months. Now, if you're, self-employed or, your expenses are different, then you have to also calculate that. Do not use credit card as your backup plan for emergency fund. I mean, it doesn't make sense financially or religiously. Now, where to save your emergency fund? Now, saving accounts, they're interest-based, so they're prohibited in Islam. And anyway, financially, they pay very little interest. So it really doesn't make sense. Now, you can keep portion of your uh, emergency fund in a saving account and maybe tell the bank not to charge you interest. So it is halal. But the rest of it, you have to invest. Now, most Americans invest in money market accounts, which pays interest more than saving accounts. Of course, for Muslims, it is prohibited. So other options are to invest in diversified kind of stock fund. But even if you are young and your style in investment is aggressive, this emergency fund has to be in a very conservative type of fund. So it does not lose a lot of value even when the market is down. Because sometimes the market is down for everybody, and that's when you need your emergency fund. You can also tap into your Roth IRA for emergency, you know, uh, and then uh, uh, finally So for people who believe sukuk are halal, you can also invest in that, and that's kind of closer to bonds, being not subject to a lot of volatilities. So you have, you're paying your debt, you have an emergency fund, and then, you know, you are saving more money. So you can, invest, and we have, mashallah, several Islamic investment options and several companies. You can invest in real estate, and that's halal as long as like maybe you rent out or resell that real estate using Islamic finance. You can invest in, halal project through private placement, partnership, or other Islamic contract. And as I said, for people who use sukuk, that's another, probably a way to invest. Um, Now, what kind of account, you can invest in? You know, have you can save money in health care account, in retirement account, in educational account, and in regular investment accounts. We'll start with the healthcare saving. Now, your employer might give you flexible saving accounts. They put money in it for you. Use it for your medical expenses before the end of the year. Otherwise, you lose it. However, health saving accounts, you don't lose the money that you put in there. You can use it later for medical expenses or even roll it eventually into a retirement account. Now, retirement saving is the most important part of your saving. You should try to max out on that, as much as possible. Now, most of the time, your employer has a 401k plan. Uh, Now, oftentimes, not I say, I mean, sometimes you can talk to your employer, talk to the company they invest in, and you can find like either buy individual stocks or individual mutual funds, or have an outside advisor be involved, and you have an Islamic option. So try your best to have an Islamic option through your employer. Now, your employer often will offer you 401k. You can put money in that, and they will match some of the money that you put in. So, also try to take advantage of that. You can max out on your employee contribution, and that's a pre-tax money. And then it's up to the employer plan to max out on the employer portion. You can also ask your employer to see if their plan allows a mega backdoor Roth contribution. So after you max out, see if you can do a backdoor Roth through your employer. This is usually not the case. Now, even if you're employed full-time, if you have a, a side self-employment job and you or your wife are the only W-2 employees at your self-employed job, then you can establish your own individual 401k. And even if you maxed out on your employee contributions in your full-time job, in your self-employment job, you cannot do any more employees contribution, but you can do employer contribution. Now, early in your career, it's very important that you concentrate mostly on Roth IRA if you can, because your tax bracket is low. You get taxed a little bit on your income, and then you put that post-tax money in Roth IRA where it's going to grow tax-free. And when you take it out after retirement, you take it out also tax-free, which is much better than traditional IRA. Of course, there is a limit on how much you can put in. You can also phase out after your income reaches certain limit. However, you can do a backdoor Roth IRA, which means um, you contribute to a traditional IRA, but usually in this case, it's non-deductible, so it's post-tax money. But then you go back later and roll it over or convert it to Roth IRA. And that's a non-taxable event because the money you put in your non-deductible traditional IRA is post-tax money. Also, another type of saving is see if your employer offers any stock option plans. Usually they sell you stocks at a discount. Now, if you are a business owner, you can either establish your 401k and max out on the employee and the employer contributions. And even if your business is very small, as we mentioned, you can do individual 401k. Now, if your business is really big, you can even go higher and establish a pension plan where you can often contribute more than what 401k allows you. Also, if you are a business owner, especially the self-employment, uh, business owners, you can hire your minor children, you can pay them. That is taken out of your salary, out of your, uh, earnings and taxed at their rate, which is usually lower. Not only that, you can also establish Roth IRA for them, which later they can use for education. Speaking of next generation and education, so you first priority when you save is you save for retirement. The second priority is you save for your children, especially their education. The most two common ways, there's one called educational saving account, and that is available even with the Islamic investment companies. And if your ability to contribute for every child is limited, this is a good one for you because it allows $2,000 a year. And as I said, it is available in an Islamic compatible way. Now, if you want to contribute more, 529 plan is very flexible. Unfortunately, though, there's no Islamic option yet, but it will allow you to contribute, 15,000 every year. You can even pay 5 years, at once at 75, or, for married couples, even double that. And you can change the account from one beneficiary to the other. Um, Another way to save for future generations is to open a custodial account, UTMA or UGMA, which you open the account in the name of the child and you are the custodian. Um, or if you are richer than that, you can probably do better by establishing a trust, and then that trust will transfer the wealth to your children, or for very rich individual, they can even do dynasty trusts. Another way to save for the future is to pay towards an annuity. And when you retire, the annuity will start paying you annual income. Unfortunately, most of those plans are insurance policies. They're interest-based and most likely prohibited by Islam. There is a variable annuity that you can invest in stocks and you can even pick the sector, but I don't think like Fidelity or Schwab will let you invest in like individual stocks. But you can talk to your tax advisor so he can research that for you. People also save by buying not a term life insurance, this one is a whole life insurance, or they call it cash value life insurance, where the cash you pay accumulates, and you can go back and take it out, or uh, uh, if you die, then the cash will go to your, or the death benefit will go to your hires. The problem with that is because the uh, life insurance, according to most scholars, is prohibited. But for some who follow the descending opinion of allowing life insurance, that's an option. Now, you're saving for retirement, you're saving for education, and you have extra money. Of course, the next step is to save into a taxable regular investment account. And your advisor can also help you by using a fund that is like they call them tax harvesting, so those smart funds, they don't sell and buy a lot. They don't create a lot of capital gain for you when they sell a lot. So it has to be a long-term, fund. It has to be low turnover. That means they don't buy and sell a lot. Uh, and if you have any loss, they take advantage of that and sell some of your gain, so your tax burden is always evened out as much as possible. Finally, you can even save for charity and, and benefit yourself too. I mean, you can either have a donor advised fund where you invest and control where the fund is going to go to which charity, or you can set up like a half and a half where the fund benefits you and the charity, like the charitable remainder trust. Uh, the trust will pay, like, for example, let's say your wife, and then after your wife passes, then the remainder will go to charity. The lead is the opposite. Well, like, let's say you set up a trust and you say this trust will pay the charity, and then when I die, the rest will go, for example, to my spouse, so she's not left with nothing or something like that, Anyway, so those are different ways to save, whether, for uh, you know, retirement, education, uh, regular investment, and charity. And then, we touched base a little bit on the Islamic, consideration also and perspective. So I hope this is beneficial. And if you have any question, do not hesitate to go to our website or email me at info@zakifinancial.com. We'll be happy to help as much as possible. And assalamu alaikum wa rahmatullahi wa barakatuh.